Welcome to the Explainer. Today, I want you to go ahead and put on your investor's hat for a few minutes because I'm going to be stepping into the role of your personal financial advisor. We are breaking down a really fascinating high-yield opportunity from a recent prospectus detailing the Sky Aura project. We're looking at a 4-star commercial and hospitality development over in Islamabad, and we're going to analyze exactly how this asset is practically engineered from the ground up to generate returns. So let's dive right into this and unpack that core value proposition. Imagine if your real estate paid you exactly like a luxury hotel. Usually when we think of real estate investing, we picture buying a house or maybe an apartment, tracking down a reliable tenant, and just crossing our fingers that they actually pay rent on time. It's a very active and, honestly, sometimes a super stressful process. But we need to shift that mindset today. We are going to explore an asset class that beautifully bridges the gap between traditional property ownership and completely passive, hospitality-driven income. Basically, we're talking about owning your very own piece of a high-end hotel. Here is our quick roadmap for this explainer. First up, market and location. Second, the asset class itself. Third, we'll map out how they're driving ROI. And finally, we'll check out the project timeline. All right, stepping right into our macro analysis with Section 1, market and location. Because as we all know, before you ever evaluate the bricks and mortar of a building, you have to look at the soil it sits on. Sky Aura is strategically planted right in the heart of Bahria Enclave. And look, Islamabad's hospitality sector is experiencing just a massive growth phase right now, entirely driven by surging domestic tourism and corporate travel. You've got this rapidly expanding luxury community nestled right against the gorgeous backdrop of the Margalla Hills. It's this incredible blend of natural beauty paired with high-end convenience. And for us as investors, that translates directly into long-term property value. That scenic location acts as a literal magnet for tourists, while the upscale community draws in affluent residents. It is the absolute perfect storm for consistent, high-end foot traffic. So, when we put this prospectus under the microscope, we naturally compared Sky Aura against other heavy hitters in the region, places like Parkview City and Margalla Enclave. And the data is super clear. Sky Aura is entering the market at a highly competitive price point, even with its premium 4-star status. In investment terms, buying into a premier, highly desirable location at an exceptional value, that's the classic tried-and-true formula for capital appreciation. You're basically getting in before the broader market fully prices in the mature value of the asset. Let's move right along to Section 2 and keep building this investment thesis. We've got the where, so now let's define the exact vehicle you're actually investing in. We are talking about a managed hotel room. If you are newer to this specific niche, the easiest way to wrap your head around it is to compare it to a blue-chip dividend stock. When you buy a dividend stock, you own a literal share of that company, right? The company's management team runs the daily operations, they deal with the actual customers, and then every quarter they just deposit a dividend into your account. Well, a managed hotel room works exactly the same way. You own the physical room, the tangible real estate asset. But a professional hospitality team handles all the marketing, the late-night bookings, the cleaning, the whole shebang. You, as the owner, simply collect that passive rental yield. Just picture the contrast here for a second. On the traditional landlord side, if the air conditioning decides to break at 2 a.m., guess whose phone is ringing? Yours. If the tenant moves out, you take a total vacancy loss while you scramble to find somebody new. But on the managed hotel owner side, it is entirely hands-off. Professional upkeep ensures your asset stays in pristine 4-star condition 24/7. Plus, the pooled nature of hotel operations generally smooths out the bumps, giving you a much steadier, highly reliable yield over time. So this setup gives us a very specific, carefully balanced matrix of benefits. Let's quickly rattle off the 4 core advantages presented in the Sky Aura model. Number 1, truly passive rental income, organically generated by the hotel's operations. Number 2, capital appreciation, heavily driven by that prime Bahria Enclave location we talked about. Number 3, easy installment plans, which we'll touch on in just a bit, making entry incredibly accessible. And number 4, a premium lifestyle experience. You aren't just buying abstract numbers on a spreadsheet here. You are buying a piece of a landmark hospitality destination. Okay, now we arrive at the absolute most important part of any financial analysis, Section 3, driving ROI. How exactly is this specific building engineered to make sure those hotel rooms actually stay full? Take a look at the blueprint of this commercial ecosystem. Notice how everything is stacked. The lower and ground floors are totally dedicated to commercial space. Right above that, the entire mezzanine is a massive food court. And then, sitting like a crown on top of this commercial hub, on the 1st, 2nd, and 3rd floors are your premium hotel rooms. This is totally intentional. Those lower levels are actively designed to feed and support the hotel levels above them. Now, to make sure that ecosystem actually thrives, Sky Aura has secured something huge. They've locked down exactly 3 major catalysts for footfall. Let me show you what they are. These are not just your average run-of-the-mill restaurants. The Sky Aura Mezzanine is going to host 3 incredibly renowned food franchises: Chinatown, Chai Khana, and Chai Hodra. When I put on my financial advisor hat and look at these names, I don't just see places to grab a bite. I see powerful anchor tenants. These brands come with massive, built-in loyal audiences. They don't just sit there waiting for customers, they actively pull people in from all across the city. They literally transform that mezzanine into a vibrant, standalone destination for families and tourists. Which brings us to the actual ROI engine, beautifully mapped out in these 3 steps. Step 1. Those big-name franchises attract massive daily foot traffic into the building. Step 2. That high footfall directly drives up the hotel occupancy. Because think about it, when tourists and business visitors come for the dining and the upscale environment, the hotel right upstairs instantly becomes the most logical premium place to stay. Step 3. That consistently high occupancy is exactly what secures the consistent rental yield for you, the investor holding the hotel room asset. The commercial floors are essentially acting as a giant, self-sustaining marketing engine for your property upstairs. It's brilliant. Finally, let's talk execution with Section 4, the project timeline, because a grand plan is just a piece of paper if they aren't actually building the thing, right? We need to evaluate the construction progress and your entry options. Construction risk is always the elephant in the room for development investments. But the visual footage and the hard data here show a project moving incredibly fast. Phase 1, the lower ground floor, is already totally completed. Phase 2, the ground floor, also completed. The foundational structure is physically standing there, and work on the remaining commercial and hotel floors is progressing super steadily. As an investor, seeing that tangible, physical progress drastically de-risks the whole venture for you. Every single brick laid brings this project one step closer to generating your yield. What I really love about this prospectus is how they've structured the entry. A lot of times, 4-star commercial real estate is completely locked off to everyday investors. It's just reserved for giant institutional capital. But Sky Aura offers these units through a really easy investor-friendly installment plan, meaning you don't need to drop the entire capital amount up front. You can secure a highly premium asset, lock in today's competitive pricing, and just pay it off over time. It makes this entire opportunity super accessible, whether you're a newer investor just building out your portfolio or a seasoned veteran looking to diversify into some hands-off hospitality. Which perfectly encapsulates the developer's core promise, summed up in this simple little mantra: invest today, earn tomorrow. It's a direct reflection of the whole strategy we've just unpacked together. Secure the asset during the development phase at an easily accessible entry point, which allows you to reap the dual benefits of capital appreciation and a structured, totally passive hospitality yield as the whole project matures into an iconic city landmark. So, I'm going to leave you with this final, provocative thought to chew on today. Is your next real estate move going to be a total chore to manage? Dealing with tenants, chasing down rent, fixing leaky pipes? Or will it be a smart, entirely hands-off hospitality asset in a booming luxury market? An asset that literally pays you while you sleep, exactly like a high-yield dividend stock? The Sky Aura prospectus makes a really compelling case for the latter. I hope this breakdown brought some serious clarity to your investment strategy today. Thanks so much for joining me on this explainer, and as always, keep thinking like an investor.